Last week I took 3 trades for 3 winners and for an 18.5 risk to reward ratio win. Now that's a lot, and I will run you through how I did it if you give me 10 minutes of your time. It will be worth it because if you understand how a big and a profitable trader gets in a trade, how he gets out of a trade, and what makes him get in a trade, well, that's really good for you. So just stick with me, it will be helpful. First of all, we have to run through the trade number one, which happened just after New Year's, and this was my first trade of the New Year's of 2025. Pretty good stuff. And we had this range right here. The reason we had this range was because we had a clear support below the low, the day level, and we had a clear resistance above the high, which was the DNPOC, which is a daily naked point of control. Now, when I have this range, I don't trade it right now. I just wait for one of these levels to be hit and then for us to go back into the range. And right now at this point, I expected for us to go down. We didn't. We went up and we hit that DNPOC level. And after that level is hit, I don't just get in a short after the level is hit. I wait for my confirmations. I wait for the price to go back into the range. And what happens? Price goes back into the range with a wick and then goes back to that 618 level, which is the perfect, golden pocket level, which people love to use. I like to use it as well. But when that level is hit, I need to see a clear absorption at those levels for me to enter a short trade, which for me an absorption happens through CVD, a bearish CVD divergences, which basically is CVD making a higher high while the price is making a lower high, just like this example right here. And what do I see on the chart? I see the price, as you can see, making a lower high. This is at XR charts. The price is making a lower high while the CVD, the third column right here, going up in price, which is basically making higher highs on the numerical scale. And when I see this, this is a clear sign of absorption and a big player is entering the market with limit shorts. And what do? I just enter the trade with them. So when I enter this short position here, I put my stop loss above the high. I have my range low as my target and take profit one at that mid channel. Well, the price pushes down, hits my take profit one. At this point, after the level is hit, I just put my stop loss at entry and then I just go out. I don't even look at the price because there's nothing to look for. The price pushes up, stops me at entry, which secures me a 3.44 risk to reward ratio win from that take profit one. And here are my confluence factors if you want to know. And if you want to learn how these work and what these are, just watch my other videos. I explain them on the whiteboard series. Now, for the second trade, it was an Ethereum trade and it was a full winner. And how it happened is we had this daily level here, which had my interest for a long time. And I had my alerts at 3490. And when that level was hit, what I looked for is, well, will we see a reaction, first of all? And will we see CVD divergences? And when we hit that level with a crazy candle on the 5-minute chart, now I started looking for that CVD divergences with the open interest increase so I can short the market. And what do I see when we hit that 618 level? I see the CVD, the graphical thing right here, pushing higher, just like the RSI thing. You can make that concept just same as the CVD. The CVD is making higher highs, but the price is making a lower high while the open interest is going up, which is a clear sign for me of an absorption. The small players longing while the whales are absorbing the orders with limit shorts. And what do? I just enter the market with short, a pretty easy, simple short trade. I have my target as these lows here, put my stop loss above the high, and then price pushes down. I fully leave the trade. I don't have 10%, 5% running on the trade. It's just 100% out of the trade, which for me is a 2.215 risk to reward ratio win, which is pretty good. 2 trades in the first week, 2 winners, and these are my confluence factors right here. Now, the third trade comes in on the weekend. Normally, I don't trade the weekends too much, but this was a bit of an exception because it was a good trade, it was a good range. Let me show it to you. So during the weekend, we had this range right here, which I shared with my Twitter following, and if you're coming from there, hey. If you're not coming from there, follow it, it's pretty good stuff. And what we had here is we had a clear support level below the low, we had a clear resistance above the high, and what I look for here is, just like always, I look for a manipulation, for us to go below the low or above the high. And what happens is we first go below the low here. At this point, we hit that DNPOC level. I don't enter the trade at this point because I look for my confirmations. And at this point, the price pushes up, hits that, gets back into the range, and then goes back at that 618 level at when we know, I guess, like a couple minutes after. And once that level is hit, what I'm looking for here is my trade confirmations. And for us, when we are having those bullish confirmations, this is what I'm looking for in the CVD. So I want the price to be making a higher lows while the CVD is making lower lows. And what do I see? I see the price making higher lows and the CVD making lower lows, as you can see here. And this is the charting, the charting style rather than the numerical scale. So, and the open interest is going up as well. So this is a perfect trade for me. I entered the trade at that 618. I have my stop loss below the low. I have my target at the high and take profit 1 at the mid channel. What happens? Price pushes up to my take profit 1. And at that point, I just put my stop loss to entry and I just don't look at the charts. And thankfully, the price gets to my target, which gives me a 12.92 risk to reward ratio win, which is perfect. Here are my confluence factors here. I hope you understand them. If you don't, you can look through my link as well on my profile. Maybe it helps you, maybe not. I don't know. You'll see, I guess. And well, basically that gets me 3 trades for 3 winners and 18.5 risk to reward ratio win. Now, if you want to see what I'm looking for this week, I am looking for this range right here. This is a pretty cool range and we're at the range highs right now. I am not in a position as we speak. And what I'm looking for right now is for us to go above the range and hit that DMPOC level and then have a failed auction there. So that would be a scenario where that would get me in a trade. Or on the other side, if the price pushes down from here and hits that daily level at 18.9 and then has a failed auction below the low, well, that would get me in a trade as well. For now, there's nothing to trade, but if we have a manipulation on either side, that would be of interest for me. So I hope that was clear for you. I hope that was a good video. And if you like it and if you want more of these, well, just like the video or not. Doesn't matter. And I'll see you around. Bye-bye.